Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week's screen talks about earnings growth, and here to fill us in on just what that all means, Kevin Matras, our top stock screener and head of our Research Wizard division here at Zacks. So, all right, let's just take it from the top, I guess. Markets go up, markets go down. Ultimately, what, it all gets down to earnings growth? Is that what we're saying?
Pretty much.
Okay, well, we've said
End
it.
of piece. No, I mean, the market's been up lately, and it's about time. Is this the rally where the market never has to look back? We're going to have to wait and see. But one thing is for certain, a lot of stocks have been moving up, some very sharply. But what's interesting is that some of these stocks have moved up, and deservedly so. Other stocks, not so much. The saying that a rising tide raises all ships, that is absolutely appropriate for what we are seeing at the moment. But eventually the tide is going to go down, and not all of these stocks are going to stay afloat. In my opinion, I think the thing that is going to help separate the good stocks from the bad stocks is going to be the growth rate, and that is what we're going to be looking at in today's screen.
But there has to be more to it than that. You can't just go pick the stocks with the highest growth rate and then hope for the best, right?
Correct. You know, it's funny because stocks that are too low, I got a slide here, stocks that are too low, those really aren't growth stocks anyways, and those kinds of stocks typically perform poorly. What's interesting, though, is that stocks with crazy high growth rates, those don't perform that great either. And in my testing, I have found that stocks with exceptionally high growth rates, probably because it's unsustainable, but stocks with exceedingly high growth rates, those perform nearly as poorly as stocks with low growth rates. So it's very, very interesting. And somebody has to figure out, okay, how do I find the right kinds of stocks with realistic growth rates that can be duplicated and replicated over and over and over again? And I think a good place to start is looking at companies with aggressive growth rates. They have to be realistic. And one thing you may want to look at is this. If you were to look at stocks in the S&P 500 right now, the projected one-year growth rate is barely break even. But if you were to look at the 5-year historical growth rate in the S&P, that comes in just under 6.5%. So if let's just say that you wanted to find stocks that doubled that growth rate, companies with growth rate current year over 13%, you have now just narrowed that list of stocks down from 500 down to only about 61 stocks. So you've got a much more manageable list. And by the way, you can do this on our free screener at Zacks.com.
All right, well, that takes care of eliminating the stocks with growth rates that are too low. What about those with growth rates that are too high?
You know, you can put in an item that says, show me companies with growth rates below X%. Personally, I prefer to look at valuations, and one of the valuations that I like to look at for this is the PEG ratio. If you were to look at the slide here, the calculation for PEG ratio is the PE ratio divided by the future growth rate. And the reason why this is important is because it shows how much you're paying for each unit of growth. Now, if you were to look at the PEG ratio, a PEG ratio of 1 means the PE is in line with the growth rate. If you have a PEG ratio of greater than 1, that means the PE ratio is higher than a growth rate. If you have a PEG ratio of lower than 1, that means the PE is lower than the growth rate. And in general, a lower value is considered better. And the reason that is because it shows that you're not paying too much for the growth. You're not buying stocks that are too expensive or that have been bid up too much. And I think this is a nice addition to use with a growth rate metric.
All right, so some stocks that have come through today's screen?
Yeah, I ran the screen. There was about 30 stocks that came through. And by the way, too, you don't have to stop right there. You can add a bunch of other things to your screen as well. And if you wanted to take it a step further, you can use the screener in the Research Wizard program and add other things such as growth rates that are above the average for their industry or sequentially increasing growth rates on a quarterly basis, quarter after quarter after quarter. So you can really refine your screen to find exactly what you're looking for. But in this screen that we have, I ran it and there was about 30 companies. Here's 5 of them, so check it out. One of them was Archer Daniels Midland. They're in the food, flour, and grain industry. Then you've got DirecTV, cable TV of course. Hudson City Bank Corp, that's a savings and loans industry. MYL Incorporated, they're in the medical industry and they do generic drugs. And then you have Prudential Financial, a multi-line insurance company. The reason why I demonstrated these 5 stocks is because this screen is finding companies, it's a very diverse list, and they're finding companies across all of the different industries. And if you were to look at the recent rally, it has been very broad-based. And I think to participate in this thing as smartly as possible, you want to cast a wider net to find the best stocks in a varying degree of industries.
You know, that what you just mentioned before you went down the list of stocks that came through the screen, that might be an interesting piece in and of itself, how to trick out your screen.
There we go.
How to just add different things, different variables to just trick out your screen. Do you own any of those stocks, by the way?
Not at the moment.
All right, I have to check. You can get over to Zacks.com, take a look at the written version of this week's Screen of the Week, and that is done just by going to our homepage and scrolling down until you see Kevin's picture and clicking on the headline right next to it. And maybe he has some other stocks there as well. And don't forget that Kevin also uses the Research Wizard software program to achieve all of his screens, and you can see more about the Research Wizard program by going to Zacks.com/Research Wizard. We make it pretty easy. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.